Hey guys, welcome back to Andrew Invest. Earnings season is upon us yet again, and today I specifically want to give a little preview into the earnings for Meta, what I think will happen, and the performance of the company this year in general. So the stock is up nearly 80% this year alone, and that kind of performance makes it the second best performer in the S&P 500 for this year so far. So how did this happen? How did the company go from being one of the worst in the S&P 500 to one of the best? And more importantly, how can we make money from it? Before we get into the history of Meta's recovery and also the earnings preview, I wanted to share with you guys my own personal transaction history of buying Meta, as I think it demonstrates quite well the concept when you're investing in a company that you have faith and believe in the numbers as well as the business. You should never sell purely based on bad news. In fact, you should be buying more in a company. If somebody came to you and told you your house was worth half the price of what you think it was worth, you wouldn't immediately panic sell to them, would you? So why would you do the same thing with stocks? You should be buying more and bringing down your average if a stock goes down, assuming that your belief in the company's data and business model remains the same. So my total holding in this stock is about $13.7 thousand, and that's significant because even though the stock is up about 78% this year, I am finally back in the green on dollar terms in this stock after probably buying in a year and a half or so ago. So I'm pretty pleased with that performance, and here we can see my first transaction, which was made way back in November of 2021, right at the top, when the stock was trading at $336 per share. I wasn't fazed by the drops in the share subsequently because I still believed in my original thesis in the company, and I saw the price going down as a way to lower my average buy-in price. And here we can see nearly a year later in November 2022, I actually bought the shares at a price which was nearly 3 times cheaper at $96 per share. So I think this really demonstrates the value of persistence when buying into a company and not losing faith when everyone else is against you. Without further ado, let's get into the story of Meta's recovery and how it happened. In my opinion, it all starts with this video here where Meta announced its first round of job cuts. So let's have a listen to what Mark Zuckerberg has to say.
Feeling. I mean, I know that there must be just a range of different emotions. I want to say, up front, that I take full responsibility for this decision. I'm the founder and CEO. I'm responsible for the health of our company, for our direction, and for deciding how we execute that, including things like this. And this was ultimately my call.
That marked the first salvo in a round of job cuts that was echoed in many other tech companies. Was it necessary? In my opinion, very much so. Tech companies, including Meta, massively overhired and overpaid for employees during the pandemic boom, thinking that demand would continue in the years after the pandemic. Obviously, that wasn't the case, and it left many of these companies with a huge number of employees that were essentially doing nothing. Let's look at this quick TikTok that went viral recently as further proof of this.
That says Google and Meta overhired thousands of employees who do fake work.
Love that creator. Go follow her if you're not following her. But I want to add a little bit more context. My name is Britt, and I didn't sign the Meta severance, so I can talk about this. Working at Meta was really weird. I was hired in April 2022. 3 days after I was hired, we were asked to take a diversity survey. Everyone else that I worked with got to work on stuff, but I didn't. So I am one of those employees that was kind of hired into a really strange position where they immediately put me into a group of individuals that was not working. I mean, like, we were just sitting there. We had to basically, like she said, you had to fight to find work. It was a very strange environment, and it kind of seemed that Meta was hiring people so that other companies couldn't have us, and then they were just kind of like hoarding us like Pokemon cards. I don't know. But it was a very strange time to work there.
Facebook paying way over the odds in order to prevent talent going to rival tech companies is strange at the best of times, but during the 2021 pandemic economic boom, it was kind of ignored and swept under the carpet. But in the rising interest rate environment of 2022, things like this were not going to make you friends with investors. And with Twitter being bought out by Elon Musk and it cutting something like 80% of its workforce and still operating fine, I think Mark Zuckerberg took note of that and decided things had to change. Let's have a really quick look at this recent Elon Musk interview from the BBC where he kind of explains the mentality of Twitter when he first joined.
You then came into Twitter with a sync. What were your first impressions?
Well, I thought, wow, this is a really nice office building.
Expensive.
Yes, a very expensive office building. Great decor. It's a lovely place. I mean, and definitely is spending money like it's going out of fashion, which it isn't quite going out of fashion yet.
Finally, the coup de grace for struggling Meta employees who have maybe been spoiled slightly over the last few years by the easy money. They're losing their cafeteria perks and free food. They're on a downward spiral. So I thought this article was quite interesting because it shows that the year of efficiency that Mark Zuckerberg has promised is actually in effect and employees are not happy about it. So here we can see the publication reported that many Meta employees lamented what they said was a decline in cafeteria options, and one worker commented on a lack of snacks and cereals at the offices. In January, the Silicon Valley Business Journal reported that Meta planned to lay off over 120 contracted cafeteria workers at its headquarters in San Francisco. Also, I thought this paragraph here bodes really well for shareholders. So even though it might not be so great for the employees themselves, who I do actually empathize with as a software developer myself, despite everything I've said so far, for a shareholder, this is really good news. So it says, so many of the employees feel like they're in limbo right now, Erin Sumner, an employee who was laid off in November, told The Times. They're saying it's Hunger Games meets Lord of the Flies, where everyone is trying to prove their worth to management. So if everyone is trying to prove their worth to management, I think everyone is going to be working extremely hard and creating value for you as a shareholder. Remember that all of these perks that are being given to the employees are effectively coming out of your money, your share of the business, if you're a shareholder. So as a shareholder, I'm quite happy about that. The company also eliminated its free laundry and dry cleaning service last year per The Times. Insider previously reported that the company cut $1,000 off its health and wellness benefits and ended a $200 a month Lyft subsidy program. So with these recent round of job cuts and efficiency savings, it probably won't affect the company's bottom line in the upcoming earnings call, because the company will have to make severance payments to departing employees, and the cost of those will outweigh the immediate savings from firing employees. However, it is an investment that will pay off within the coming years, I believe. Also, Meta recently confirmed in an SEC filing that even in 2023 alone, it will already be saving around $3 billion in costs from the efficiency drive. In addition to the recent efficiency drive from Meta, there's the tailwind of Meta finally recovering from Apple's privacy changes. And it's done this by a major investment in AI. So Meta's troubles with advertisers for the last 18 months may soon be over. Meta's ad performance is recovering close to pre-ATT levels, those are the Apple changes, Jacobson said. The company recently deployed ad targeting through artificial intelligence. AI is something Zuckerberg and other Meta executives have repeatedly highlighted this year as spending on the metaverse seems to take a backseat. Wall Street approves shares of the company are up 131% from 5 months ago. So businesses are seeing that their ad revenue driven from Meta is finally starting to recover back to the pre-ATT levels seen before the Apple changes. And in a tough economy, when times are tough, marketers revert to the tried and true channels, namely Google and Meta. Why risk your money on things that aren't proven to work like Snapchat or TikTok when you know that spending money on advertising through Google and Meta works? So one of the main criticisms of Meta during 2022 was that the company was spending far too much money on R&D, and specifically metaverse R&D. What many of those people don't realize is that the majority of money was being spent on AI R&D, and that is paying itself off now, and it was 100% needed, especially after the Apple privacy changes, which completely collapsed the business model of Meta. The company is now recovering from that. And here we have a clip of Mark Zuckerberg speaking about the company's desire to become a leader in generative AI in the same way that it is in recommendation AI. Generative AI is stuff like ChatGPT, image generators, things like that.
One of my goals for Meta is to build on our research to become a leader in generative AI in addition to our leading work in recommendation AI.
With that and the news that Mark Zuckerberg is apparently spending all of his time on AI, not the metaverse anymore by the sounds, there could be a shift from the company away from the metaverse into AI, and I for one would personally welcome that. I see a lot more uses and benefits for profitability coming from AI over the hardware business of the metaverse. So if we look at Make a Video, it's a new generative AI project from Meta whereby you can effectively generate a video by putting in a prompt. It's very similar to other image generators that we have right now, but by the looks, it's pretty advanced, and I really think that it has the potential to revolutionize clips and certainly videos. Overall, I think that earnings will be positive, and I am still very bullish on this company's prospects. I hope you enjoyed the video, and if you did, please like and subscribe, and I'll see you guys next time.